Hey guys, what's up? This is Andrew for TRENDLINES.com. So for those who are watching my video for the first time, let me quickly introduce myself. I've been working as a professional trader for the past 6 years in Hong Kong. And right now, guys, I'm making YouTube videos because I want to pass the knowledge. I want to show you all the different tools and techniques that I like to use at work to make money on the markets. And most importantly, and those who are watching my video for some time, they know this is true. I want to explain you guys how to do it yourself. So I'm explaining my analysis step by step so that you can follow what I'm doing. So in today's video, I want to make a massive update, guys, on AMC that is reaching the targets one by one. Let's get into it. Alright guys, so a few things I want to show you in this video. So maybe the first thing, let me remind you my two scenarios, or maybe let me take a step back. You know, I like to do this sometimes. So I'm on the forward time frame and I want to explain to you guys, you know, the reason why I was so bullish here so that you can use these methods on any other stock. I know that AMC has very specific reasons for this price action to develop this way, but the mechanisms that are behind it are still the same that you can find in any bullish price action development. And by the way, I want to stress something out, guys. Look at this price action here. So I'm on a forward time frame. I mean, you know, if you just forget about the scale that of course is explosive here, but this price action to me just looks normal, you know, and I'm gonna come to the point I want to bring you guys is that this was not normal, right? Look, you see, this was not normal. This is a squeeze. This is a massive buyback of short positions by short investors like hedge funds, all right? And when this happens, you have those moves. So this was the move we had in Jan. We had 400%, guys, in a matter of 8 hours, all right? This is a squeeze. Here, we're not having a squeeze, guys. We're having a stock that is going higher because it deserves to go higher for, I would say, healthy reasons. I'm not having here an unhealthy price action development, nothing that for now is scaring me. I'm having here a very bullish stock that is just going higher in a very bullish way. That's true, but not in an unhealthy way. So I think that this is sustainable. If we go to much higher levels, so I gave you a target of 135 by next week. Let's see, guys. Let's see what is playing out. You know, once again, I have another scenario that is a bit less bullish, but that goes to the same level. Maybe we correct here, maybe here, but ultimately we're gonna go here, guys. You know, I'm very convinced of this. And the reason why I'm convinced of this is because here what I'm seeing is clean. And when I have that clean price action development, so guys, of course, I'm not 100% sure, but usually, guys, this is the kind of development that we're gonna keep having. And for now, this is not complete to me. So yeah, that's what I wanted to tell you in this video, the first thing. And I also wanted to show you something else, guys. You know, we're talking here about 380%, you know, in 8 hours. So we are very, very far from it yet because we're not having a squeeze yet, guys. I'm really waiting to see the short interest data coming from the FINRA reports. That is very important because even if there are some naked shorts, and I know there are in this market, the regular shorts are still a very good indication of what hedge funds are doing because most hedge funds are actually declaring their positions properly. So for now, we're not having this squeeze happening. I'm going to bring you to this data very soon, guys. But here, I just want to show you something that, you know, you might be interested to see is that if this scenario plays out, then we have this scenario coming, all right? So don't focus about this level. It's a random level. I cannot give you precise targets that far. I'm going to keep updating you guys all the way up. And for now, as you can see, my targets have been reached. And each time we had some reactions around the levels I was telling you. I also told you the way we're going to go there. And this is what is happening. Why am I right here? Because we're having a healthy bullish development. If it was a squeeze, no one can know where we're going to go. This is going beyond Elliott wave theory. But Elliott wave theory can still help you to know where we are in terms of the development of the waves, and they're still gonna happen, guys, for the same reasons they always do. It's because when something makes a lot of noise, and AMC is making a lot of noise right now, some people that were not in this trade are gonna come to this trade, usually a bit late, and this is what we call the fifth wave. All right, so fifth wave is actually created by some new investors that usually arrive a bit late, because if they buy here and they don't sell here, there are those who are actually gonna pay all the ones that bought here, and I know that this is you guys. So for now we have time. We don't have all the fifth waves complete. We having them one by one, and each time you have the fifth wave complete, you have a massive correction or consolidation. For now we're consolidating here, but I think we still have a few fifth wave to come in larger degree wave countings. All right, because you know, when the noise spreads, sometimes it takes time, and at the time it's going to spread far enough so that all the fifth waves are going to be complete, and we might see the squeeze happening, especially guys if hedge funds can't resist, and they would not resist to sell shares at those very, you know, high levels. And I'm going to follow this very closely. I'm going to update you guys. So let me bring you to my dashboard. And guys, I'm going to keep updating you with what I'm seeing here. And guys, in my last video, I updated you guys with the 70 strike calls happening, but look what I found. I mean, it's easy to find. I just didn't check, but we're having 145 strike calls listed right now. And we already have like a lot of shares, like 3 million equivalent shares. And what is very funny, guys, to watch 2.7 million equivalent shares. And what is very interesting, not funny, it's just interesting, guys, is that it's coming from the June maturity, guys, in 11 days. No, sorry, 18th of June in 13 days, 2 weeks. That's possible, guys. My target is next week. So maybe in 2 weeks. So, I mean, I don't think we're going to go to 145, but maybe we would. But 135 is definitely a reasonable level. I mean, not reasonable, but achievable level. And here, guys, we're having this bullish momentum that is creating this, you know, upside gamma again, that is gonna, you know, make the market makers buy shares. Right now, we're having 4.1 billion USD synthetic short exposure on the AMC option market. Once again, guys, very quickly, this information, you can't find it anywhere. What I'm doing here is what I do at work. I compute the delta myself. I use this formula, guys, you know, it's Black-Scholes formula, very basic stuff. And I do it for every maturity. I take the option open interest from Yahoo Finance, the volatility from Yahoo Finance, and I follow this volatility, guys, you know, because it's an indicator of what market makers think of the price action. And you can use the delta as an estimation of the probability we go at a given strike. So for example, the probability we go to the 145 strike in July is 50%, guys. This is what the market makers are pricing, 50%. This is incredible, guys, you know, but this is what market makers are forced to price to actually compute this call option prices. So this is the reason why now I'm going to bring you to some call option strategies. You don't want to buy those naked calls. All right. They're too expensive, guys. You don't want to buy it. It's not a good trade. Of course, it could be a winning trade, but you have better trades you can make. Let me show you. So here you can start. So basically I took these options from Yahoo Finance. So July maturity, AMC trading at 47.9. I just copy paste this in my spreadsheet and I compute my strategies. And what I want to show you guys, so okay, you can buy the 100, for example, 100 call. This is going to cost you 1,000 US dollars. And if AMC goes to 135 or 140, you make 3,500 US dollars. All right, that's good. That's good. But look what you can do. You can buy the 100 strike and sell the 135 strike, because I don't think we're going to go higher than this. I think that this is, for me, the ceiling. And let's say you do this, then guys, it costs you only 250 USD. So 5 times less. And how much money you make if AMC goes there? The same money. So you just sacrifice the upside performance above the 135 level. But this is why it's good to combine those option strategies with technical analysis, because, you know, technical analysis will tell you where you're going to have some reactions. or you just buy, you know, the 100 call and you put some selling orders. If you have shares, this is also what you can do. If you have 100 shares, you can also do like this. And then when we come to 135, here you can sell 2, for example. So you're just capping your upside performance here the same way. What I mean is that you have different ways to build your strategies, but keep in mind that this volatility here, let me just show you guys, this volatility here is very expensive, guys, all right? And you just need to keep in mind, bam, you see, we are talking about vols of 350%, all right? 350%. So in terms of daily move, you just divide this by 16 and it gives you the daily move, bam. So we're talking about 22% of daily moves, which is fair, all right? Which is fair. But guys, keep in mind that buying those call options is not the best strategy you can make. Another strategy is that you make a butterfly. Butterfly is very cheap, guys. You need to select your strikes in a symmetric way. So here I have this 85. You start wherever you want and plus 30, all right? So 115 plus 30, 145. And then you do a 1 by 2 by 1. This, the sum of all your options. So 1 minus 2 plus 1 must be 0 if this is symmetrical. And then you have a butterfly. And look, the price of a butterfly, guys. Here I'm updating the price, same with my formula, just a VLOOKUP. And for $100, you can make up to $3,000, but it's very hard to actually, you know, find the level it's gonna end here. So a butterfly is cheaper, but it's harder to make, you know, the same profits, but you can just double your butterfly, you know, and then you can make up to 6,000. So just, you know, depending on the risk profile you want to have, you can make some beautiful strategies. But just keep in mind, guys, that buying those call options without selling anything is very expensive, as at this very, very high volatilities. But of course, if we go higher, they're going to keep increasing. So it's going to be a good trade, but you need to time it very properly, which is difficult. Even when you use technical analysis that is telling you, for example, that this week we're going to go there, you can't be sure. You can't be sure. So you buy a call spread. Once again, this is what I would do. I would buy 135 call spreads, for example, 2 by 2 up, up. So for $500, I can make up to 6,000. And this is once again for the July maturity. So another thing I wanted to show you is, yeah, I'm going to follow this very closely, guys. I can't wait for the 28th of May here to be released. 28th, because for now I don't have this data, guys, but I really want to know what is the short interest. Sorry, 28th of May. I really want to know what is the short interest here, guys. For now, this data is not available, but when it's going to be, if I see here that the short interest is growing, guys, this means that we're going to start having this unhealthy, you can call it this way, moves that are going to squeeze hard. All right. Imagine a 380% move from here brings us actually to my target. So if we go to my target in 8 hours, then I would tell you this is a squeeze. But if we go there, you know, the same way we did here, which is, you know, just slowly growing. This is, you know, people buying. And actually, when you look at the volumes that are trading, it's not only people, it's hedge funds and institutional clients that are buying as well. You know, those volumes, it's not only apes buying. Many people are getting into the AMC trade. Many investors, big investors. There is a lot of money at stake here. A lot of professional investors understood that the right side is on the buy side, and they're getting in this trade as well, and they're helping pushing the price action higher. And once again, guys, here I think we still have some room. So I might be wrong. If I am, I would explain what I, you know, missed or what happened. But for now, I am 100% right on my targets of AMC, and let's see. I hope I'm going to keep being right here. I hope for you guys, and I hope for all the apes community. So that's it for me. I hope you enjoyed this video, and if you did, please don't forget to click on the sub, like and bell button so you're going to be the first to know when I upload anything new. And stay close to shore. I'll see you guys.